Hello and good afternoon. You're watching Market Fatafat on ET now with me, Vinny Motiwala, along with me, Cheryl D'Souza as well. But let's look at what the market is doing before we get into all the stocks that are in focus today. And market seems like, holding on to decent gains. Nifty seeing gains of around 0.5% in trade. 19,400 is what the Nifty is holding on to since the get-go. We've seen those levels, and that is what the Nifty is holding on to as well. Even the Sensex holding on to around 0.5% of gains there, while what we're seeing is the mid-cap space that is outperforming. Nifty mid-cap seeing gains of around 0.8% in trade. Nifty small cap seeing gains of more than 1% in trade as well. So yes, clear outperformance is coming in from the broader markets as well. Nifty Bank holding on to 0.2% in gains. Now when you look at it, advance decline ratios, it's more in the favor of advances than in the favor of declines. All the sectors as of now are trading in the green. What's leading the gains today is the Nifty metals that's seeing gains of around 1.1%. Nifty Realty, Nifty IT too holding on to strong gains over there. So yes, that's how the market setup is looking like. Strong performance as of now. Sustained performance is what we're seeing coming in from the markets, and that's what we're going to be watching out for through the next couple of hours as well. But on that note, let's get started with all the stocks that are buzzing in trade, either on the back of news flows or on the back of technicals. And on the technicals, today we are joined by Foram M.Chheda, while from the research team, today we have Ankita as well as Ashesha joining in with us. A very good afternoon to all three of you all as well. Good afternoon to you as well, Cheryl. And as always, I'm going to be starting with the first stock that is in focus, and that is going to be M&M Financials. Now, M&M Financials is in focus on the back of a brokerage note that we're seeing coming in, and this is from Motilal Oswal, where they're maintaining a buy and they've given a target price of 350 rupees per share. What they're saying is that M&M Financials is actually exhibiting a very strong performance, given the operating performance, and weak asset quality was there, something that is of the past for the company. They believe that management has undertaken a lot of steps, strategic initiatives, which they believe will be executed properly and could script a credible transformation for the company going forward as well. There are strong moves, especially coming in terms of the rural, semi-urban customer segments, positions for M&M Financials, and that will reap a lot of rewards for the company going forward as well. They believe they model a CAGR growth of around 19 to 20% in AUM as well as PAT respectively over the next couple of years. Let's keep an eye out on that. They're maintaining a buy rating, target price of 350 rupees per share, and that is why the stock is buzzing in trade, 1.8% gains as of now.
Alright, that's M&M Financial for you. That is in focus. But let's talk about pre-call then. And that particular counter also was a buzz in today's trading session. It hit a record high level as well. At one point in time, the stock was trading higher by about 4.5%. But yes, right now the day's highest point, that is pre-call for you. You have MK Global that's come out with a note where they're saying that pre-call's a potential beneficiary of recovery in the two-wheeler segment as well as the premiumization that we are witnessing in the auto sector. They're saying that the company is aiming to double their revenue by the fiscal year 2026 from 1,930 crore rupees that was registered in FY23. They're also saying that they are expecting strong capabilities in electronics and software segments, and that will position firm for the robust growth going ahead for pre-call. Also, what MK is saying, they're seeing margin expanding on easing chip supplies. Also, they're expecting pre-call to deliver approximately 30% earnings per share CAGR over the fiscal year of 23-26. So yes, thumbs up coming in from MK Global on pre-call, and as you can see, the stock is perched at the record high levels today and at the day's highest point as well.
Absolutely. Let's move on and talk about stock number 3, and that's the first stock that we're going to be talking about today on the show on the technicals is Aarti Industries Forum. Aarti Industries on the charts. What is the indication now you're picking up for Aarti Industries? How is the performance and target that you're expecting? Because yes, clearly we're seeing that the stock has seen a correction in the last 6 months. Now, should we expect an upside or more bit of correction?
Well, first talking about the chemical space, it was clearly in a downtrend until last few trading sessions. In July, we did see a bounce, and the stock had made a low of 445 levels in the month of July and then witnessed a bit of a bounce. So when it bounced, it was actually a beginning of a consolidation pattern, and from down, it has started moving sideways. Now, yesterday, it did see a breakout from this consolidation pattern, and today it has also been up marginally. And it opened up today and now is witnessing a bit of a corrective move on the downside. But this move on the breakout side, so if the stock price has to retrace a little, it becomes a buy and it gives you an attractive level to buy from a risk-reward ratio perspective. Secondly, when the stock price made a breakout yesterday along with volume, it also crossed a 50-day moving average, which indicates the short-term trend is bullish. Thus, the overall perspective, considering the price breakout along with that is increase in volume, the stock moving above the 50-day moving average, and even there is a positive divergence on RSI, indicates that the overall stock is positive. Thus, one can look at buying the stock at a lower level of 478 to around 480, maintain a stop loss below 463, and look for a higher target of closer to 500.
Alright, moving on then, let's talk about the cement sector as a whole, Ashesha, and what is it that you're picking up with regards to cement sector, and that's why it's on your radar?
Well, yes, cement stocks are in focus on the back of cement channel checks, which suggest that on a pan-India basis, cement prices have fallen nearly 1% on a month-on-month basis in the month of August. But for the southern and eastern region, cement prices have fallen by nearly 3 to 4% respectively in the month of August. Prices in other regions have largely remained stable. Remember, second quarter in any case is a lean quarter as far as prices are concerned because of monsoon. But the street will be watching out for how cement prices pan out after the monsoon season, and that is in the third quarter. As far as raw material prices are concerned, diesel prices have largely remained stable, but energy prices have gone up and imported coal prices have also risen nearly 8% on a month-on-month basis. Let's also talk about demand, where demand has been strong. In the first quarter, we saw volume growth of about 10 to 12%. Second quarter, as I mentioned, is a seasonally weak quarter, but for the full year, volume growth of about double digits is what the street is expecting. So on account of this news flow that has come in with respect to prices and demand, all of these cement stocks are in focus today.
Surely keeping an eye out on those cement names. But let's move on and talk about Avanti Feeds on the chart then. And Foram, seems like in the last couple of years, after giving negative returns, finally in the last 6 months, maybe seems like Avanti Feed has actually picked up some pace. Is that an indication coming in on the charts, and should we expect a further upside?
Absolutely, as you rightly made a mention, so it's just taking up some pace. So like most of the stocks had made a bottom in March, end of March rather. So even this stock had made a bottom in the end of March, and now it has been trending up gradually higher. So when it is inching up higher, it has already crossed important moving averages of 50-day, 100-day and 200-day moving average. When the stock has already crossed these important moving averages, it indicates that the underlying trend of the stock has now turned bullish. Now, last week, the stock did make a breakout from actually a resistance level that was closer to around 416 to 417. But this breakout was backed by a very good increase in volume, and since then, the stock price moved up and now has traced back to the breakout level, that is retesting the breakout level. So when it's done that and now is showing signs of resumption, it indicates that it has some more potential to move up higher. Thus, one can look at buying the stock between 423 to 425, maintain a stop loss below 412 and look for a higher target of closer to 443.
Alright, moving on, Shakti Pumps, Ankita, this one looks to be a buzz on back of an order win.
Cheryl, and how it is up 20% in trade. It's now logged in the upper circuit, and yes, it is on the back of an order win, which is for 358 crores. And this is the first work order for the company that it has received under the Kusum 3 scheme from the Haryana Renewable Energy Department, and currently the stock has hit its 52-week high as well, and it is surging towards its record highs of 910 rupees. But for now, this order win has clearly pumped up the stock, and it is surging 20% in trade, locked in upper circuit right now.
Okay, let's move on and talk about the next stock on the charts, and that is NTPC. Foram, what are the charts indicating for NTPC now? Last week, today seems like a bit of a subdued performance there. What is it that now one should watch out for here?
Well, in NTPC, since October last year till around June, the stock was clearly in consolidation and consolidating and hovering between multiple moving averages. Now, since then, that is in the month of June, mid-June, the stock price did pick up a lot of momentum and it started moving up higher. So, well, in July, it formed a bottom at around 184.75, and since then, the stock has been just stepping up gradually. It witnessed a steep up move and formed a peak closer to 226 levels, and since then we can see a corrective decline. So this entire move was nearly around 22% of the gain. Now when it is declining or retracing, I would say, it is trying to take support on the 38.2% Fibonacci retracement, which indicates that there is a good support level at closer to 210. So it took support there and we can see a bit of a bounce coming in. So currently the stock price is at 220 levels, which is a decent level to get into the stock. One can maintain a stop loss below 215 and look for a higher target of closer to 232 to 233.
Okay, keep an eye out on those levels for NTPC. Let's move on, talk about Sham Finance. This one is in focus on the back of a brokerage note that has come from Kotak Institutional Equities, where they're maintaining a buy and a target price that they've given is 2,300 rupees per share. They believe that Sham Finance is actually likely to outperform, and they are giving two indications and two matrices where they believe that this could be an indication. One is going to be in terms of asset quality behavior of the company, and the second one is going to be on the margin front, where they believe that the company could start seeing an outperformance coming in. Overall, in terms of the loan growth, they believe that could be at around mid to high teens and is healthy but lower than the fast-growing diversifying peers. They've highlighted the benefits of the merger and increase in the fee income are yet to be factored in, and that's the key highlight that would work out for Sham Finance as well. So that is why they're raising their estimates, retaining a buy given the revised price at 2,300 rupees per share, and that is one of their favored large NBFCs, a combination of inexpensive valuation as well as favorable macro supporting a strong asset quality and peaking bond yields is something that is keeping them positive on Sham Finance, and that is why the stock is buzzing in trade up a percent as of now.
All right, that's Sham Finance that is in focus. But Foram, coming to you, let's talk about HDFC Life and what's happening with this particular counter when it comes to the chart. Last 6 months, silently, it's actually seen an up move of approximately 30%. But where do you see HDFC Life going ahead?
Mentioned has already seen a good up move of nearly 30% in the past few months, and now it formed a high of closer to 690 in the month of July, and post that we've seen a bit of a corrective decline. It has been forming minor lower tops and lower bottoms. So however, this down move is clearly just a retracement of the entire bigger move what we've seen. Now recently there is some kind of a stability which can be seen in HDFC Life after it's corrected from the peak of 690. And since it's formed a base, it's kind of formed like a double bottom also, and the support levels are closer to 624. As far as RSI, as the relative strength index, is also indicating a bit of a positive divergence, which adds to the bullishness to the stock. And when the stock is picking up some up move or some pace, there has been a marginal increase in the volume, which is supporting the bullishness. Thus, a couple of these observations, like the price base formation, the RSI positive divergence and increase in volume, makes the stock little attractive to buy at current levels, maintain a stop loss below 650 and can look for a target of closer to 655.
All right, moving on, let's talk about Indigo, and definitely this one is not flying high in today's trading session. In fact, most of the counters which have actually crude as a raw material also or as a derivative is actually not doing well. Indigo is actually declining in trade. We've seen a spike in the crude oil prices as well. But if you look at what IFL is saying, that the sharp widening in the crude prices as well as the jet fuel prices for the past 2 months will pose a big concern for Indigo going ahead. They are saying there could be a double-digit % increase in aviation turbine fuel costs on September 1st, and they're saying possible that the Q2 will be a small loss coming in for Indigo versus earlier estimate of a small profit is what they've actually mentioned in their note. They are saying that they had forecasted a weak Q2 earlier this month. That is, Indigo had anyways forecasted a weak quarter earlier this month owing to seasonal weakness. However, IFL is for now maintaining their estimates on the earnings front for Indigo, despite the fact that they have highlighted that the company may post a small loss in Q2. But they've set a target price of 3,300 rupees per share. So that's IFL just forecasting the fact that this quarter could be tough for Indigo. And as you can see on your screen, the stock is trading lower by about 1%.
Okay, let's move on and talk about Berger Paints then on the charts. And Foram, when you look at it, the stock actually has moved up from those 550 levels 6 months ago to around 720 levels as of now. At the current price of 720, would you still see a buy for Berger Paints?
Compare it to Asian Paints, for example, it has underperformed, and where Berger Paints has outperformed. So considering the relative strength that it has, I would yet consider quite a bullish buy. So as far as Berger Paints is concerned, it's clearly been in an uptrend for the past I would say since this year, beginning of this year. So in this month, the stock has merely been consolidating, not done much, but has been holding up to the higher levels. and currently it is attempting to take off the resistance level of closer to 721. The current market price is closer to around 719 to 720. And since it's trying to break out from this resistance of 721, along with some buy indications from the parabolic SAR also, which is supporting that it can pick up some upside momentum. So overall, I have a bullish stance on the stock, and one can maintain a stop loss below 707 and look for a higher target of closer to 745 to 747.
All right, moving on, Ashesha, let's talk about SBFC. This one is a newly listed counter, but why is this in focus today?
Well, yes, newly listed candidate, it is in focus on the back of very strong results that it reported for the first quarter, and the stock as we speak sitting with gains of nearly 4.5%. So for the quarter gone by, net interest income stood at about 115 crore rupees, which is an uptick of 46% on a year-on-year basis. As far as profitability is concerned, that too has seen an uptick of 47% on a year-on-year basis and about 10% on a sequential basis. As far as AUM is concerned, it now stands at about 5,230 odd crores, an increase of 8% on a sequential basis, and disbursements have also seen a growth of about 4% on a QOQ basis. So yes, very strong set of numbers, and that is what the stock is reacting to, 4.5% higher in trade as we speak.
Keeping an eye out on SPFC on the back of a strong set of numbers that were reported by the company. Let's move on to the next stock, and stock number 13, we're going to put focus on JSW Energy on the back of the technical front. Foram, last 1 month already seen 23% return, last 6 months 48% return. How much more upside now?
Well, I am actually counting more of an upside closer to between 7 to 10%, at least in the near term. So when talking about it technically, the stock is making an attempt to break out from the November 2021 highs. And a breakout from such a long time indicates the kind of strength that the stock has. And the industry also has been picking up a lot of momentum. So considering the industry having the momentum and the stock also trying to break out from quite a long-term pattern is indicating a lot of strength in the stock. And it is possible that for the next few days it can consolidate and then pick up space, but the overall trend continues to remain bullish. And today also it tried to attempt to break out, and right now we can see that it's come down from its highs. However, it's a good and a decent level to get into the stock from a risk-reward perspective. So one can look at buying the stock at current levels, maintain a stop loss below the levels of 349 and look for a target of closer to around 372.
All right, so that's a take coming in on JSW Energy. But Ankita, let's talk about ULTER Tech, and why is this one in focus?
Cheryl, ULTER Tech is in focus on the back of a brokerage note that came out today. It is by CLSA, and they have maintaining an underperform on the stock, and they have hiked the target price to 8,400 from 7,900. Now they expect the company to report industry-leading growth and profitability, and the capacity expansion and focus on renewable energy is likely to aid this. However, the valuations at 14x FY25 EV EBITDA, they see limited re-rating potential over there, and the recent rebound in fuel costs, that should restrict the earnings upgrade a little bit. And on the back of this note, the stock is in focus, and we're seeing the reaction. It is up 1% in trade today.
Okay, let's move on and talk about a banking name on the charts, and Axis Bank. Forum, what is your view on Axis Bank now? What is it that one should watch out for? 16% return in the last 6 months is not bad, but furthermore upside is what one could expect.
Absolutely. So overall, the stock is now picking up some pace. Now, in fact, in the month of June, it made a high of closer to around 985, 989 levels. So let me round it off to around 990. Since then, it has attempted 3 times in the past till the month of July that it couldn't take it off. It witnessed a corrective decline, and now it's back again making an attempt to move up higher. So if you see in the last few trading sessions, the highs were closer to around 994 to around 990, 991. And today it's made a high of closer to 998. So we can see the kind of attempts it's making to move up higher. Along with that, now we can see an average increase in volume of a 10-day moving average. So when we can see that there is an average increase in volume, also indicates a bit of bullishness. Secondly, there has been a buy mode in the parabolic SAR also, and when the stock is trending above the multiple moving averages, it indicates the overall trend continues to remain bullish. Thus, I would consider it a buy at current levels, maintain a stop loss below the levels of around 975 and look for a higher target of closer to 1030.
Okay, keep an eye out on those levels of 1030 for Axis Bank. But let's move on, talk about Jupiter Wagon and Ethos. Both these stocks are in focus. Yes, it's a different news for both of them. I mean, similar in terms of that, but yes, different. Is why? Because they've announced fundraising plans. One, Jupiter Wagons has said that they will be meeting on 5th of September and they will be considering some fundraising that time. And other than that, we have Ethos also, which came out with an announcement that the company is going to be meeting on 1st of September to consider the fundraising plan, and this one is going to be through QIP for Ethos. So on the back of this, we've seen a move coming in both the stocks. Though yes, Jupiter Wagons has locked in lower circuit as of now. Ethos is trading with gains of 3%.
Moving on, let's talk about Trientech, and this particular counter is a buzz in today's trading session. If you look at the stock price, at one point in time it was trading higher by approximately 10% or so. It touches highest level since August 14, and not just that, the 10% up move that Trigen actually registered on an intraday basis was the biggest percentage jump coming in since July 13th. As you can see, the stock is holding on to gains about 8.6% as we speak. The reason for such a sharp up move is the fact that the company informed the exchanges that they've received a letter of award from the Digital India Corporation, Ministry of Electronics and Information Technology, and this LOA that they've received is for providing technical manpower for Lok OS project. So on back of that, you can see the stock is seeing sharp gains. In fact, it's a second consecutive day of gains coming in for Trientech.
Okay, let's move on and talk about Laurus Labs then. And when you look at this whole pharma side forum, so surely there has been a pickup, and we have seen a lot of gains coming in this pharma names. Laurus Lab 2 last 6 months has managed to see around 30% returns. What is it that now you should be expecting from Laurus Lab? Is there an upside, or maybe now it's time for some bit of a correction here?
We're talking about a lot of pharma stocks have seen a lot of more momentum compared to Laurus Labs. Now talking about it in particular about Laurus Labs, last year the stock was clearly in a downtrend. From the peak of 605 to closer to around 278, that's a correction of more than 50%. Since then, the stock has stabilized and is now gradually inching up higher. The stock price has moved above the multiple moving averages, so it's indicating that the underlying trend has turned from down to now up. So that's quite important for the stock, that the trend should start changing, and that's what is happening. And at the beginning of this current month, the stock moved from 328 levels to around 418. That's nearly around 27%. As you rightly made a mention, it's already 30% up, and now has been consolidating. But recently, the stock is showing some signs of again resumption of an up move after consolidating for the past few trading sessions. And additionally, the stock has moved above the 200-day moving average, which is very important, along with a good increase in volume, which is supporting the bullishness. So I consider it a buy at current levels also, and one can maintain a stop loss below the levels of 380 and look for a higher target of closer to around 440.
Alright, so that's Laurus Lab for you. But moving on, Shesha, BSE, this one is in focus, and why?
In trade today, nearly 7.5% higher in trade as we speak, and this is on the back of a brokerage note that has come in. HDFC Securities, in fact, has upgraded the stock to a buy rating with the target price of 1230, and the stock currently trades at about 980 odd levels. HDFC Securities says that they expect BSE derivatives market share to increase to about 10% by the fourth quarter of FY24, and this will be driven by onboarding of large member brokers, the launch of new weekly index contracts, hedging activity, and continuous increase in active traders. So on the back of this, they expect derivative market share to increase by about 10% by FY24. The increase in derivatives volumes can also boost cash volumes for the company going forward. They say that the steps taken by the new management are yielding results and will boost growth and margins for the company going forward. They also expect revenue growth of about 19% over the period FY23 to 26 and EPS growth of about 25% over the corresponding period. So for now, they have upgraded the stock with a buy rating, and they've given a target price of 1230, because of which the stock is gaining in trade today 7.6% higher for BSE Limited.
Let's move on to stock number 20 for today. And Ankita, Ashok Leyland, why is this one in focus? What's the news for you?
It is on the back of a brokerage note that's come out by CLSA, and they are maintaining a buy on the counter with a target price of 230 39 rupees per share. And they feel that scrappage policy is really the need of the hour. And there are 1 million trucks that are more than 15 years old, and a stringent scrappage will boost the commercial vehicle cycle. Now, the scrappage of old commercial vehicles is also essential for reducing pollution, and they feel that the government incentives are pretty attractive for scrappage. And on the back of that, they're maintaining a buy on Ashok Leyland. And on the back of that, we are seeing Ashok Leyland to be in focus for today.
Let's move on and talk about MPS Limited. Why is this one in focus? Because yes, the company has said that they have its subsidiary, that's MPS Interactive Systems, actually will acquire 65% stake in the Australian-based Liberat Group, which is at and for a value of around 9.32 million Australian dollars. And the entities will also then they will later on acquire, the subsidiary will later on acquire 35% of the remaining shareholding in the company in subsequent tranches, according to the deal as well. And let's not forget, Liberate Learning is into e-learning systems, app e-learning as well, and they are also in New Zealand as well. So that will give the company an opening in these geographies as well. And currently, when you look at the revenues of these companies, it's at around for FY23 it was 8.3 million Australian dollars, while the EBITDA margins were somewhere around the 40% mark as well. And this is for FY22. So on the back of that, so let's keep an eye out on MPS today, buzzing in trade, holding on to gains of 3.6% as of now as well.
All right, and let's hear out the oil minister who spoke exclusively to ET now about the crude prices, the status of the OMCs. This is amid the cut in the LPG prices. He also spoke about a lot more other factors. Listen in.
The price of crude oil is determined by a global situation. We are dependent up to 80% of our requirements on imports for crude oil, about 55-60% on the import of natural gas. Our OMCs incurred a loss of 28,000 crores. Now, they are not operating on their own money, they raise money in the market. So you had to compensate them. So that 28,000 crores was compensated up to an extent of 22,000 crores. If you are to insulate the common man, I mean the economically weaker sections, the people who live below the poverty line, then both the government and the OMCs will have to do it. It's not as if the OMCs are collapsing. I can say with a degree of satisfaction that the OMCs today have registered very reasonable and healthy financial results. I'm choosing my words carefully. There are quarters when they do better than other quarters. But I think when the Prime Minister decides that the price of a cylinder, a 14-kilo cylinder, has to come down on the occasion of Onam and Raksha Bandhan by 200 rupees, the OMCs are happy, the country is happy. OMCs have large businesses. Some of them make big profits in a quarter, some less. But they're all doing reasonably well.